Hello everybody, Cowboy here, and we have a clip from this morning's free beginner lab. You can catch that over at YouTube, over at the Algo Factory channel, which that's probably what you're on right now. However, you might also be elsewhere, so go check that out. And the website is at the bottom there, www.algofactory.tech, and stick around. Right after the clip is a little more data on how to find us. In the meantime, we're going to talk about how economic data affects markets, and we're going to go ahead and start. So strap in, enjoy. Well, if we look at Forex, we might see something different. I know we will, because it was a massive move at that same time. Thursday at 6:30 sparked a rally. Okay. So price was already set to go up, but it did kind of spark a rally. So if you look right here, and that this candle that went up right there, that was the news. It wasn't a huge effect overall. I think it was either priced in or one thing about the news yesterday was it was an unemployment number. So the unemployment claims were higher than normal. And on this Forex Factory, if you take a look and if you click right here, so where it says, all the data on this kind of folder, it'll tell you that actual less than forecast is good for currency, right? Well, in this case, the actual is higher than forecast. And what does that mean? The unemployment claims right here. If you look here, the number was 261,000, which is higher than the expected 236, which in and of itself was higher than the prior month, right? And when numbers come out higher than expected, that's when the market gets a little bit of a shock. And so when unemployment is higher, the way that this affects things is that the Fed's mandate is, number one, to fight inflation, keep inflation low. Number two, to keep unemployment low. Those are their dual mandate. And with unemployment being high, what that does is that says that whatever the Fed is doing with regard to inflation is starting to break things a little bit, right? If unemployment was low, that means that the economy is functioning well, right? And that means that raising the rates has not had a negative effect yet. But now that we see, unemployment being higher than expected, then the interpretation, whether or not it's true, is that the rate hikes that have been going on are basically, causing problems in the economy and it raising unemployment. And so that interpretation is extrapolated to say, okay, they're going to have to start stopping the rate hikes. They're going to have to pause the rate hikes. And if this continues, they're going to have to actually do rate cuts and go back to more of an easier financial conditions, loose financial conditions, cheaper money, right? So how does cheap money work in the market? And therefore, how does expensive money work in the market? So as the rates have been hiking, money has been getting more expensive. Now, all the money that is, not all, but virtually all the money going into the market nowadays is borrowed, right? Your large companies are, using their corporate debt to finance stock buybacks. You have, you have money that is being created by banks and given to these asset managers in order to, basically buy stocks. I mean, it's not as simple as that, but it is in a roundabout way. That's how it ends up working. And when money is expensive, that causes less investment, right? When creating money at a higher interest rate happens, it's more expensive. So to borrow is more expensive. And then the rate of return that we're getting from the stock market is negated by the rate caused by, these rate hikes, right? So it's like, oh, well, we're going to just put our money somewhere else. So that being the case, or we're just going to, save money, or, what they're not going to do is they're not going to borrow to deploy, right? They simply may not borrow at that point. It's just like right now with the mortgage, the mortgage situation. Now mortgages are, I don't know how true it is, but I've seen that reports of a mortgage being like, 30, 40, 50% higher in some cases because the rate is much higher than it used to be. So, what used to be a $4,000 mortgage is now a $6,000 mortgage. So, who's going to mortgage and buy a house, or who's going to borrow money at that rate? You used to be able to borrow like 100,000 on a HELOC at 3%, 3.5%. Your mortgage was, I don't know, or your payment might have been. I'm just gonna pull a number out of the sky because I'm not really a mortgage guy. I was gonna say your payment might be $800 or $800 a month or something, right? And then now all of a sudden that same 100,000 is going to cost you 1,200 or 13 or 14. Like that's not, now that's like a half of a car payment more, if not a whole car payment, right? So why would you borrow? Why would you invest? So that's where we are in the world. Well, when this news came out with unemployment being higher than expected, then again, the interpretation is that the Fed needs to stop hiking rates and even start cutting rates in the future. And cutting rates means money is going to be cheaper. So the market goes ahead and says, oh, well, we're going to start investing. We know more investment is coming, so we better get in on this early. And you have these little spikes. So that is the picture on the surface. Now, some of the picture that we're not talking about necessarily is, at least we haven't talked about it so far today, is that the banks use these news events as a carte blanche to kind of push price around and knock people's stop losses out. So just see if we can find a strong news event to talk about that real quick. Let's see. We'll go back to say, okay, so right now we're in June and FOMC is going to be on the 14th. So let's look at May 17th. I think that's the last FOMC. Maybe it was the week before that. May 10th. CPI, here's a good one. So Wednesday, 6:30 a.m. CPI. Okay, so that's May 10th. So we'll go to our chart and we'll take a look at Wednesday, May 10th. And we'll see what happened when the CPI report came out. CPI is a big look right now. CPI is an important metric at the moment because, and this is a really good example of what we're talking about, by the way. So CPI is the Consumer Price Index, and what that is it's just a measure of inflation for the consumers. And inflation is the Fed mandate, number one, it seems. And so, it's, I don't know, number one, number two, but it seems to be the most important one right now. It's the one they talk about the most. Unemployment is not, it seems to take a backseat to that in the headlines, right? And so CPI, if inflation is like high, then the thought is that they're going to have to continue to hike rates. So if the inflation came out higher than expected, you're going to think like, okay, we're going to have to continue to hike rates. And as you hike rates, it's harder to borrow money and less investment happens. And in this case, CPI was actually as expected month over month. Year over the year, it actually came back lower. And core CPI, which is CPI minus, I think, gas, let me see, excluding food and energy. So core CPI is like CPI, but it doesn't count food and energy. That actually came back a little bit higher. So it was mixed numbers. So however that was interpreted, you had this, even though it was kind of mixed and it might be hard to even think, oh, what's going to happen with that? Well, you have this massive spike up. Now, if you look at the chart, price was on a downtrend, and it might be that a lot of people thought price would continue to head down, especially after this kind of right at the top of that arrow right there, right at like midnight, or I should say 1 a.m.-ish, price took a heavy fall, right? And then price kept heading down, 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 down. So a lot of people were probably like, oh no, price is going to go down. You even have these kind of hard moves down before that are all happening the day before. And then all of a sudden price just goes up really high. So what might have happened here is that as price kept heading down and people started like considering, oh, well, maybe there's a downtrend. Maybe the news on the CPI is not going to be that, it'll be whatever. Maybe CPI is going to be low and they're going to have to hike rates more or whatever the number. I said the wrong thing there. Maybe CPI is going to be high. They're going to have to hike rates more. And so people thought price would go down. And so what a lot of them did, I can almost guarantee it, was they went short as price was going down. They went short right there, and they had their stop loss maybe above this prior peak right there. And then they probably had their take profit, somewhere down here, because the general trend was down. And as you can see, after the announcement, price did continue downward, right? So that might be what the trade looked like. And the people who run the world and run Forex and have, Bloomberg terminals, and they just have a lot of access to data, they knew where all the stop losses were. So what they do is they use these these economic data announcements as just an excuse to push price earnings. That's not legal. To move markets like that, to knock people's stop losses out, that's not legal. But hey, it was FOMC or it was CPI announcement. Like, it just happened on its own. It wasn't us. We swear, wink, wink. So they just knocked out these stops. And then people probably went short again, like, oh, the move happened. So, they already knocked the stops out. So let's go ahead and go short, So people probably went short again right here, right? And then maybe some of them had a pretty tight stop, and then maybe they got knocked out on the way down here, but price ended up continuing down lower. So price was in the end supposed to go down. A lot of metrics said that it would, but that little quick push up here was, very, very possibly these kind of high level people taking people's stop losses out. And when that happens, if the price is going down, your higher level traders also know price wants to go down, and they want to get an entry, and they want to get an entry up high. So if they're pushing price up here, then people's stop losses are effectively a buy order. So, you have a stop loss, like, say, right here, and then right there. Well, if price goes through that, then getting out of a short trade, because again, these trades were short trades, they got knocked out. Well, getting into a short trade is a sell order. Getting out of a short trade is a buy order. So pushing price through these stop losses actually causes the retail, that person who was in that trade, it causes them to buy out, and it pushes the price up even more. So taking advantage of these people's buy orders is what those are, is going to push the price up more, and they don't even have to pay for that. They just got to pay to get the price up to where everybody's stop is, and then everybody else's stops does all the work for them. And then they go ahead and enter way here up at the top, probably using a VWAP, which is a way to enter large positions. And they probably had orders waiting up here as well. So, and it's all very measured, and these people know what they're doing. And then they probably accumulated shorts all through this area where price was just kind of hanging out. And then of course they went ahead and made money as price continued on down. So this is why when it comes to news, I wait for the news jitter to go away. I wait for this kind of action right here to calm down. And then I relook at all the metrics. And once the initial reaction calms down and all the leverage is wiped out of the market, I go ahead and make my move on that. So we are live every weekday, 8:30 AM EST, giving out free content. Come check us out on YouTube. Come talk to us. Go over to the website. That's www.algofactory.tech. Again, www.algofactory.tech. And for a limited time promotional offer, we are giving out memberships at $49.99 a month. There's a ton that we're offering over there. Come see what that's about. Also, you can see our Twitter link. All the links are up on YouTube. Come talk to us on social media. See us on the live YouTube videos. We hope to see you soon.